Well, good morning, everyone. Welcome to our Thursday morning trading room. Just a moment, we get the screen share going on. All right, so let's take a look at the daily NASDAQ chart, kind of give us a bigger perspective. What's interesting, last few days we've had very strong rally days, very good volume. Note the long tails. That kind of goes to confirming the possible sideways nature of the market, that we may be developing a great big sideways trading range. What's likely to happen is we're going to go up here a little bit, we're going to try to come down a little bit, then it's going to be crunch time. When we get that little reaction here, the next push will either go higher or the market will head lower. That's almost the same idea as when we watch the market break out from a trading zone. But there should be some sort of resistance here. It looks like around 76.50, maybe 7,700, where the sellers are likely to step in and try to push the market back down. It's not quite where we're finding ourselves yet, but we're not that far off. If you include the overnight, we do have a nice little sideways trading range going on. The overnight really retracing the same kinds of numbers, not that there weren't decent ranges there and a reasonable amount of volatility, but overall, we really didn't go very far. For those of you who like your first in-sync eagle signal of the day, well, it looks like it printed right here about a minute after the open. And you're still working that, although there is a possible rule of three signal here on the eagle, which is actually the reversal signal. I think I'm going to hold off here for a few minutes anyways, at least until it looks like we may have something resembling a trend. Excuse me. Okay, well, we do have a completed rule of three here now on the eagle. The falcon's going to give us a bit of a trend change signal. Here, let me get the rule of three signal set up, and then I'll explain what's going on. So the rule of three signal simply, oh, all right, well, we're in there. The rule of three signal develops when it's a counter trend signal. So first and foremost, you have to have something that resembles a trend. Then you start producing these counter trend signals. Typically after the third signal, the market's going to try to go, which is what we see happening now. And I'm going to jam my stops in really tight. I was a little bit late getting in. Oh, it looks like they tagged me out and headed lower, stinkers. I was a little bit late getting in on the trade, so that's why I brought my stops in tighter, because very often, as you see right now, once we hit our high probability profit objective, the market is occasionally prone to making a little bit of a pushback. And I did not want to give up nearly $200 in open profit on a break even. So I hate to sound like a broken record all the time, but if you were looking to make your $100 trading quota, that's $100 per contract, well, you just did it. You just made your $100 per contract. Your trading day could be done. The reason I mention this all the time to you is it's so important, and it's something that very few traders ever get a handle on. I wanted to make sure the fellow I'm about to speak about isn't in the trading room this morning, and I certainly won't mention any names. And I'm certainly not talking down to anyone, because believe me when I say it took me a very long time to learn this lesson. Currently, I'm working with a fellow who's been trading with us for a very long time, at least the last 5 years or so. And he's writing me in desperation saying, Eric, what am I doing wrong? I'm not making any money. I was up $550 yesterday, and when the session ended, I was negative 10 or negative $100. Really? You were up $550 and you kept trading. Listen, folks, the money is not made in trading more often. I wish I could reach through the stereo speakers or your headset speakers and grab you by the shoulders and shake you. The money is not made by trading more often. The money is made by finding a high probability setup and then capitalizing on it correctly. Your objective should be to earn $100 a day per contract. That can be either one $100 trade, or it can be two $50 trades. Take your pick. If you can do that day in and day out, there is no limit to the amount of money you can earn. You want to earn $1,000 a day trading? There are people who do that. How? Trade 10 contracts for $100. Really, it's as simple as that. It is all about the math. And this is not a stupid man we're talking about. He runs a very successful business, but he can't get it through his head that you're not on a production line. The market will do what the market will do. And there's this great little quote, and I forget exactly how it goes, but it says something to the effect of, the market will do whatever it has to do to relieve the most people of their money. That means you're going to get sideways chop. That means you're going to get head fakes on breakouts. You're going to get all kinds of sucker signals. You're going to get these trading ranges where the market is just going to go back and forth and back and forth. And you know what? I've been guilty of it. You've seen it. You've seen me in the trading room sometimes get caught on these non-committal type of days. It happens. It can happen to the best of us. But the difference is I'll recognize it and I'll stop trading until the market behaves itself. Or I'll have my pain threshold where I down $1,000. I'll say, okay, today's not my day. Something's not going right. I'm going to come back tomorrow. So, I'll keep telling you. Hopefully, you'll get it. But really, that's trading. And I've mentioned it before too. Why do you want to sit in front of a computer for 5-6 hours a day trading? Really? I thought we're doing this so that we can go do other things. If you want to spend 5 or 6 or 8 hours a day doing something, go get a job. At least you'll get paid. You can spend 6 hours in front of a computer and not get paid. In fact, it may cost you. Well, I can almost guarantee you it will cost you. All right, I'll put the soapbox away. But he sent me like a dozen charts to analyze, and it's like, buddy, it's not the signal. It's you. How do I tell him politely? Stop over trading. You're up $500. What's wrong with you? Okay. Ray's asking a question. Good morning, Eric. Well, good morning, Ray. I believe yesterday you mentioned on a way to make the chart vertical bars to be shorter or smaller. How did you do that? Okay. Well, the vertical bars, are you referring now to the wicks on the bar? If that's the case, what you need to do is you need to go to your data series. And you can adjust the reversal portion. By default, if you don't know, just go with the default brick size for the trend and the reversal. So in the case of the Raptor or the Falcon, the default brick size is 8 ticks. So we would make the wicks and tails 8 ticks, that's the reversal portion, and we would make the trend 8 ticks. But you can play with it. Let's say, and you can still keep the sum total of 16 the same, but let's say you wanted a smaller wick. So the easiest way to do this kind of stuff when you're playing with this is to go to extremes. So let's say we're going to knock it in half. So we'll go with 4, and let's say we add another 4 to the trend. So we still got a sum of 16. And now you can apply that. And as it reloads, the reason we did this on the new mean wrinkle bars is that you could actually tailor it for the market that you're watching. Because, hey, let's face it, the markets are a little bit different. And what that will do is, well, there was one that kind of snuck in there a little bit bigger, but it's going to have a tendency to make the trend bars a little bit more obvious. Once you make changes like this, it's a good idea to, take a few moments, go back through your charts and just see how did the signals perform. Now, don't be upset if you get a signal and a pullback. Remember, you need to leave a reasonable stop anyhow. If your objective is to find the signal, take the trade right there and put your stop loss order right there, I got some bad news for you. It's not going to work. It may work most of the time, but it won't work all the time. You should anticipate or allow for a reasonable pullback. And this signal, even though there was a hesitation, did work out. So that's what you want to do. I wouldn't be so concerned about the counter trend signals because they're a lower probability anyhow. But at the very least, you want to make sure that your with trend signals are working, or if not working, at least giving you the opportunity to get to a break even. Now notice this number one signal, if you kept a proper stop, actually did work out. What's a proper stop, you say? Well, if you keep your stop at least 2 swings back, you will very likely ride out most pullbacks. So how you're going to determine 2 swings here is really up to you, but I would at least call that number one and this number two, although I would be more inclined to call that number two, given the proximity. Remember, your initial stop is only your safety net. It doesn't have to stay there. But what you don't want is to get tagged out right after you're in a trade, right? You don't want to place your stop right here only to suck up a $150 loss and watch the market go up and hit your profit target. I don't know about you, but that really bugs me. If you kept your stop down here, however, the market comes down, yes, you're panicking, you're saying, oh no. But then the market eventually turns and now you can begin to roll your stop with each subsequent swing and finally hit your profit target. Or at the very least, get your trade to a break even, which, while annoying, is not nearly as frustrating as a stop out. Then, of course, you can play with it. You can move the other way. And you can refine these numbers. But like I say, if you want to see what they do, if you go to some extreme numbers, it kind of shows you what they do, and then you can refine them from there. Uh-oh, did I break my my program? Well, that doesn't look right. Oops. All right, well, bear with me here a moment as my computer plays catch up. Okay. Alrighty, so here we are now back in a bit of a sideways funk. Maybe we're going to see the buyers now press higher as we make a little bit of a breakout to the top side, and we get that number 3 signal, which I'm again late on. Shoot, I hate that. All right, let's see if they give me a second push on this one. I would have hit the profit objective, which is very annoying. Looks like we're going to get a discretionary signal here, however. No, we're pulling back a little bit too far. Better just leave that one alone for now. Why ask for trouble? You're going to miss trades. You're going to miss trends. Welcome to the wonderful world of trading. Well, that was a rather short-lived move higher. And here we are now with the Falcon and the Hawk both making trend change signals. Ooh, shoot, let's get on board here with the Falcon. Okay, turn my chart trader on, get my stop out of the way. Okay, and now get ready for the break even as we're 3/4 of the way to the profit target, and hooray. Okay, so why did I decide to get on board with that trade? Well, one nice thing about day trading, I think a distinct advantage that day trading has over other forms of trading is that you actually get to watch the bars unfold. So we saw a bullish break. Here, it's a little bit more obvious on the Raptor, perhaps. So we were watching the Raptor here. We had this little sideways congestion period. The market broke out. Well, if it breaks out, it should continue higher, shouldn't it? And yet, it did not. In fact, it came back and gave us a number one signal, the Falcon signal, I think producing at the same time, and then the market falling off nicely. This is why I totally disagree with the pattern day trading rule. I think it's extreme disadvantage to the small trader, and I think it's meant to be such. Oh, but it's for your protection, they say. No, it's not. If I blow up my $5,000 account in a single day trading, well, then that's on me, isn't it? Having a $25,000 account isn't going to make that any different. I've met people who have blown up a $25,000 account in a single day. We are getting some wild swings going on here this morning. Well, if I wasn't finished before, I would certainly be finished now. I've got my 2 trades in. I've got a tidy little, profit. Why would I risk it? I'm up $200, a little bit over. And again, $200 not enough for you? Trade 2 contracts, that's 400. Still not enough for you? Trade 5 contracts, that's 1,000. Still not enough for you? And so on it goes. Once you wrap your head around that, you will be way ahead of the game. Another thing you have to come to grips with is if you cannot successfully trade one time a day, or get your $100 profit, whether that's one $100 trade or two $50 trades. If you cannot do that day in, day out, you have no business taking 4 trades or 5 trades or 6 trades, because you don't know what you're doing. It's like putting you behind the wheel of an airplane. the controls of an airplane. If you don't know how to fly, what are you doing there? Terrible analogy, but I think you get the point. So you got to be patient with yourselves. First, learn how to do it once a day, then go do something else. If you can do that successfully for a month, where most of the days are profitable, you may not, go 20 for 20, but that would be nice. Even, here's our TraderView account. I've had a few losing days through here. Last month has been a little bit dicey, but here's the more important one. You don't see that too often. Percentage win last 30 trading days. Oh, 100%, 100%, 100%, 100%, 100%, 100%. And that is not from trying to trade 10 times a day. But that is a nice way to trade. Okay, well, I've been jabbering here a little bit. It looks like I missed out on a very nice move higher off this number one signal. And again, it was a bit of a rejection because, well, we now had the breakout lower and they stop going lower and then they come back and they start going higher again. So when you see the market fail to follow through on a breakout, you can get ready to go the other way. Funny we didn't get a test of the extreme down here. All right, are they gonna keep going higher now? We haven't really got the hard edge bounce. There was a nice little 4 arrow consolidation here in the hawk. Nice little pullback, macro pullback turned into a 4 arrow consolidation. Nice little pop up on that one. Oh, just when you think the buyers have got it under control, they start to lose their grip. I was just about to say it looks like we're going to be in a bull trend today, but maybe not. We're back, or we blew past that 76. Oh, no, sorry, we haven't. Sorry. I thought we were up at 76.50 already. My mistake. Oh, interesting. Getting a little bit of a little bit of sideways constipation going on. I'm going to put my just in case order to buy above the high, because that is the trend leading into this. Ooh. I'll set my profit order. All right, get my stop loss in play. All right, you gotta go. Don't give me one of these one tick trends. Shoot. A little premature on that one, perhaps. If we can get above the 76.28 zone, I think we'll be okay. Oh, come on now. Looking for a couple three bull bars that I can begin to roll my stops. We're into the first hard edge, so there should be a reaction here. Oh no, come on. All right, I'm going to take my stops in a little bit. Lost all the momentum. Now we got the old counter trend signal coming in. All right, I'm going to back off just a little bit here to keep my stop two swings back. Last chance for the buyers. Because I would hate to get tagged just a couple of ticks below that first swing. Come on. There's now the hard edge bounce. That's encouraging. I don't want to really see a number 2 signal here. That would give me that dreaded 232, but that would make the market more open to a reverse. Oh shoot, and here it comes. Nuts. Okay, I think I'm gonna be caught on the wrong side of this trade. I'm gonna look to shoot. I was gonna take advantage of that number 2 signal when it printed. Okay, so I got my stops below that swing there. This funny thing is, this should have printed as a number 2 signal. It did not, however. Okay, I got a couple bull bars. I'm going to roll my stop up. Again, I'm not jamming it like one tick below the low. That's just kind of asking for it. Come on, give me another bull bar. There we go. Okay, I can adjust my stops a little. Got to get above this 76.25 zone. That's what knocked them down a few times. We come back from that, we're going to get a number 2 signal. This is why I'm trailing the other signal. I don't normally reverse. I don't like reversing on trades. In fact, I better leave that away a little bit. Trying so hard to get bullish. Come on, buyers. Let's go. The Bollingers are in sync. That's encouraging. Okay, I can roll my stops a little bit more. And given the difficulty of getting above this high, if I get about halfway, I'm going to get my stops up here to break even. Oh, no. Okay, so I'm going to trail anything with a tail to it now. I'm going to get ready now for a possible break-even opportunity. At the same time, I could bring my profit order down and allow it to take me out at break-even. Or I could just punch out of the trade. But I'm kind of stubborn that way. Don't look back too far. Come on, get up there. Come on, make me look like a rock star. One more push through 76.30 and we're there. That will definitely encourage some buying. Okay, I'm going to roll. That's all I'm going to give them is that bar right there. As I mentioned yesterday, I need to close the trading room at the bottom of the hour today. Ah, stinkers. Okay, well, you know what? Those kinds of losses, it was nearly a break even. Those aren't the kinds of losses that are going to devastate your account. Took a little $40 hit on that. But you can see what happens. Well, I'm preaching to the choir here. We all know what happens. You keep going back to the market one more time, and sooner or later, you're going to get stuck on the wrong side of the trade. The market's going to do something, make you think, "Ooh, this is a nice opportunity." But it's not. They're going to turn around and pick your pocket. The trend is still up, I think. You know, we did see a decent move lower, but I do believe the trend is up. If you wanted to call this your sideways trading range, well, now we've got the breakout. We're looking for the retest. You could put your just in case order to buy above there. I would not be opposed to a little bit of a pullback. I could see the market maybe trying to come down here. Yeah, check out the whole 76.10 zone. Maybe even get a little lower, get into this mix down here around 7,600. This is tough trading though, because look, we're right in the middle of this trading range again, aren't we? Anytime you're inside a trading range, it's going to be tough. Okay, so now we have the market pinched. We're going to either see a test of the extreme, a failure, and the market head lower, or a test of the extreme and the market head higher. I'm going to go with a rather modest profit objective here, higher and lower. Remember, we had the breakout. This is the retest, even though it's within the range. Do the buyers have what it takes to take the market higher? Right now, it doesn't look that way. We're going to get a comparable signal here on the Raptor. We're going to produce a number 2 signal. We're going to produce a trend change signal on the Falcon. The Hawk, a little bit of a mess, though. Here, we'll continue to play this one on the Eagle. All right. I'm not so sure about this, but all right, let's see if they got it. Okay, I'm taking the trade to break even. It may be premature, but we're kind of trading at some funky levels here. Nuts. I was probably too early on that. The lack of follow through on the breakouts is a concern. You see a breakout, you see a retest, you see another breakout. There should be some giddy up. There should be some follow through. And I realize the market doesn't always make a straight line, but there should be some follow through. Well, the broker will be happy. It'll be easier getting back in on a pullback if we get a little bit of a pullback. Well, and there they go. So they did one more little mini swing before pushing higher again. That's okay. Now we got a little bit of a double top going on, don't we? They're really conflicted. Well, we are getting in that 76.50 neighborhood, I suppose. Perhaps that's giving them pause. I'm sure, Floyd, if you're watching your ADX, I'm sure it's well below 20 or 25. I forget which threshold you're watching. Okay, we got a number 3 signal now on the Raptor, which is interesting. But again, we're at these highs where we keep bouncing back. So I think I would welcome a second push opportunity. Okay, and that's it right there. So we got the number 3 signal. We got a reaction. So I would look to buy above that high if the market comes back that way. We're going to produce another pseudo number 3 signal. Haven't quite touched the hard edge, but getting there. Oh, we're coming back now with a number 2 signal. All right, well, we can get rid of that. thought we were going to get a bull break, but it was not to be. Frank says, hi, Eric. Hey, Frank. Says, I've been away for quite a while and notice the charts appear different. Are there new indicators to download from the website? The charts appear different because these are the NinjaTrader charts. And the only reason I am running NinjaTrader charts is because I got tired of answering all the questions. Why are you still on Ninja 7? Ninja 8 is the latest. So I finally moved over to Ninja 8. The biggest changes are cosmetic. The downside with Ninja 8 is that the Trade Manager will not work. Trade Manager has and continues to have software conflicts with Ninja 8. Honestly, folks, I doubt the issue will ever be resolved. In its place, however, we do offer the Trade Calculator, which is your risk management tool, which will keep your risk contained to an amount you can afford. It is Ninja 8 compatible. As a Trade Manager owner, you can pick it up at a discount, an extreme discount. I'm waiting for the number 2 signal for another test of the extreme and a short signal to develop. Here at the bottom is the Bollinger Band Suite. This is an add-on indicator. This is something I featured on our Rabbit Hole Fridays months ago. And I was so impressed with the indicator that I actually kept it on my charts. I put it on all my charts, as you see. So those are the biggest changes. Should you move from Ninja 7 to Ninja 8? Not necessarily. If you have a good reason to move to Ninja 8, then by all means, move to Ninja 8, pick up the Trade Calculator. If you want to add the Bollinger Band Suite, you can get the Bollinger Band Suite for Ninja 7 too, by the way. Then please be my guest. But are there significant advantages to using Ninja 8? No, none that I have found. In fact, like I said, if it was not for everybody always asking me, why are you still on Ninja 7? I would probably still be on Ninja 7. All right, so we got another number 3 signal. We're going to produce another number 3 signal. I'm wondering if we get the higher swing low, if that's going to be enough to finally push us through the 76.33 zone, which is what I might consider for an entry. Maybe. If you're ever curious whether there have been software upgrades, and there are not that many, occasionally there are upgrades for something cosmetic. But if you log into the members area, you will be able to download whatever the latest version of your software is. All right, this is a little bit of a hit and hope type thing. I'm looking for the initial breakout of this trading range to have some follow through to it, which seems to have been lacking lately. All right, we're about 2/3 of the way there. I may as well take the trade to break even. And there we go, 3/4 of the way. Come on, you guys and girls. Come on. Oh, they're so close. Ah, this is what they were doing the other day. They break out and then come short of my profit objective and kind of leave me hanging. Oh yeah, there we go. Now we'll get the reverse and the follow through. Watch this. Stinkers. Yeah, there it is. Would have made the profit target. Oh well. All right, gang, I'm going to have to close up the room here shortly. So if anyone has any questions, please put them into the chat window. I will address them before I go. Well, that was a nice little hop up. And now we're kind of flip-flopping a little bit. All right, well, if you're going to continue to trade here the rest of the morning session, I would really welcome a little bit of a pullback again. I think we can definitely call the market an uptrend today. Pullbacks are going to be the easiest way to re-enter this market, especially if it produces another little bit of a sideways trading range. Remember, the market will be more likely to continue with trend out of the range than to go counter trend. I would not get too cute with the counter trend signals, although I think a pullback to the hard edge is probably not that far off. All right, gang, I will talk to you tomorrow. We'll see you then. Bye for now.